Time now to dive into some of the tech earnings from this week and recap that. For that, I want to welcome in Dave Mazza, CEO of Round Hill Investments, for Insight. Dave, it's always great to hear your perspective. Great to see you. I haven't talked to you in a little while. So we had a slew, even though this has been essentially the wind down of earnings season, we did have a slew of names report this week. Most recently, we had Broadcom. Shares are higher in the pre-market. They beat expectations. They guided better. EPS coming in at $1.60 a share on an adjusted basis. Revenue nearly $15 billion. The guidance higher than what the street was looking for. What's your reaction to Broadcom first?
Well, I think Broadcom's really one of the only bright spots that we're seeing in the tech market these days. And what's interesting is you hit the nail on the head. Is really coming from the guidance side. Is many of these tech companies, the expectations were so high, especially for the semi names, some of the software that really saw a pickup. So I'm thinking their Salesforce and ServiceNow heading into earnings. But Broadcom showing that certainly NVIDIA has such a huge lead and huge moat when it comes to AI chips. Broadcom does have some leadership in the space. Look at the AI earnings that powered it forward, and a stock that was very oversold. I think today's after hours bounce and heading into the pre-market this morning is a real positive in an otherwise sea of negatives for tech.
So for Broadcom, how sustainable do you think that growth is? Do you think they have a big enough moat around them?
Yeah, so Broadcom's a company where, it has been sort of that almost eighth member of the Magnificent Seven. Some folks have talked about kicking out Tesla most recently and putting in a Broadcom. I think, of course, all the attention was paid on NVIDIA. There was a little bit on AMD on what they were doing in that space. But really, I think Broadcom has kind of been a silent leader. It's a name, even though it's a $1 trillion company and change, or was, that just didn't get as much of attention as some of the others because they were sort of like NVIDIA, sort of pigeonholed into doing one thing. For NVIDIA, that was gaming. Broadcom, more traditional kind of chips and the like. But I think we're showing that now we're getting into a bit of the second leg and second wave of potential AI winners or beneficiaries. And Broadcom to us is one of those names.
And so I want to go back to, as you mentioned, that, it's a standout this week, but you saw a lot of weakness. For instance, it's a very different story for Marvell. Shares were hit hard, and initially Broadcom was hit off the back of those results. NVIDIA faced some pressure this week as well. What does that tell you for the landscape here when it comes to the tech sector? Is it kind of part that the bar is just so high for that sector, or is that the growth story is slowing and the valuation just doesn't make sense now?
Well, I think it's a bit of sort of almost this little mini perfect storm with all of the above to your comments. And so let's hit the areas sort of one by one. So first and foremost, yes, expectations for many of these names got incredibly high. I think investors and analysts began to really forecast incredibly high growth. Now, we believe that barring a massive economic slowdown, which, again, in this market, we could maybe see that or see an economic boom. There's just a lot of uncertainty right there now because of tariffs, that these growth numbers are going to be really hard to be sustained at the valuations that these names were trading at. And so we're in a bit of a digestion phase, as the market begins to kind of tease out what are these macro headwinds going to do for all of these growth numbers and the multiples that were priced into these stocks. And right now, I think investors are sort of planning to ask questions later, probably bake in some of the gains they had, and then sort of move on and reassess.
Do you think the tech sector is at risk of kind of a broader valuation reset? In the context of, you mentioned the macro headwinds, but in other words, if the AI growth story doesn't kind of live up to expectations?
Yeah, broadly, I think when we think about 2025 as a whole, we're still optimistic on the market and on tech as sort of being a leader there. But there are a few sort of internals that give us pause right now. One of which being is, we know that cap-weighted tech hasn't made new highs relative to the S&P 500 in some time. But if you actually look at equal-weighted tech, it made fresh lows to the equal-weighted S&P 500. And so right now, I think, again, valuations are just being really pulled back. Maybe a bit if we get through some of this uncertainty of what's happening with tariffs and what the Fed may do. Obviously, we have a really important macro event today with jobs report, then another Fed meeting. When some of these headwinds dissipate, that could be an opportunity for tech to drive higher. But in the meantime, I think, again, investors are really pulling back with the uncertainty and then using that probably as an opportunity to reassess.
Are there any segments within tech or, say, cloud computing that you believe could outperform despite the headwinds?
Yeah, it's interesting. So when we think about our generative AI portfolio, we actually, recently sort of did some I'd say, major repositioning in that in anticipation of what may be a bit of a tougher period for tech. So reduced weight to some of the software names. That was a space where a lot of folks we know software really took the leadership from semis in the back half of 2024. That came to a screeching halt most recently. And so that's an area where we're not really seeing the implementation of AI lead to immediate ROI for those companies. And I think investors are now at the stage of they want to know, when is this CapEx that's being plowed into AI going to start paying off? And we're at a stage now where all that CapEx has happened, and we haven't seen enough on the guidance side to kind of make it clear that those could be areas that are opportunities. A space that we do like, actually, is China tech. Super underappreciated. But as the Chinese equity market perhaps comes back into vogue in a more sustainable way, some of the names like Alibaba and Baidu, who have been doing a ton of work in AI with large language models, but not getting the attention because everything was focused on the US, actually may be an area. So what we're actually teeing up is that there could be more opportunities outside of the US in tech than maybe in the US in tech, at least for the time being.
Well, you've certainly seen that more opportunities and more returns outside of the U.S. recently in both Asia and European market performance. Dave, thanks a ton for your insight and assessment of the state of the tech trade. Dave Mazza, CEO, Round Hill Investments. Thanks a ton.